Hey everybody, Smart Silver Stacker here. Hope you're doing well. Don't forget you can buy your gold and silver at sdbullion.com. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. Now, we need to talk about both the gold price and the silver price today because it's looking like both of the metals are being set up for something big here this week. There is the potential for a big move in the metals. Now, which direction that goes is yet to be determined. But let's start off with the chart for gold. So gold yesterday just put in a record all-time high closing price. You can see here on this chart from TradingView, gold yesterday closed at $2,471. Now the previous all-time high record daily close was $2,468. So, gold has been taking out new record highs, session after session for the past several months. We had this significant breakout back in March. It's been consolidating since then in this upward trend. But once we break through this trend line, right around $2,500, we're going to be taking off on the next step in this metals bull market. And this week, there's a few things that could really contribute to a big move in gold and silver. The first thing is tomorrow, we have got the CPI data coming out, the inflation data, and this could result in a big move in gold and silver. Now, I think we may be back to the bad news is good news dynamic here. Of course, we had the jobs report a couple weeks ago, triggered the big sell-off in the markets. What that was bad news was bad news. We got a bad jobs report, everything fell. That's kind of counter to the dynamic that we have been witnessing over the past year plus, where bad news actually causes an increase in asset prices because what's going on here is there's no more real price discovery in these markets. Everything is about what the Federal Reserve is going to do next. And what happened was when we got that bad jobs report, people thought maybe the Fed had waited too long to cut rates. It's all about more easy money. That's what is driving these markets, precious metals included. So tomorrow, if we get a cooler than expected CPI number, you can expect the markets and gold and silver to perform well. Right now, according to the CME FedWatch tool, which is a forecaster for where the Fed is going to place the interest rates at the next Fed meeting here in September, you can see everybody is expecting cuts. But the question is, how deep are the cuts going to be? Are we going to get a quarter basis point rate cut, or will we get a 50 basis point rate cut? Sorry, 25 versus 50, or a quarter of an interest rate point or half of an interest rate point. What's going to happen? And right now, investors are forecasting, they're leaning towards a deeper rate cut, the 50 basis point rate cut. I lean that way as well. I think the Fed realized after that marked sell-off in the stock market, they're realizing how weak things are. And look, for anybody who believes the Federal Reserve is not political, well, we've got an election coming up, and they tend to favor the incumbent, and therefore I believe they are going to try to pump more money into these markets, and that's going to be good for gold and silver. I mean, it might not be good for the overall economy. It's certainly not good for the purchasing power of the dollar, but if we get a cooler than expected inflation print tomorrow, you can expect the odds of a deeper rate cut to rise, and that's going to cause assets like gold and silver to be bid up. Now, let's go to the silver chart here because we need to look at this. Silver is at a key level right now. So, first of all, this is the monthly chart for silver. So this is a very long view. And I want to examine what's gone on in recent months. So in May, silver got up as high as $32.75. That was a big deal because the last time silver traded above that level was back in 2012 here. You can see in December of 2012, silver was above that level. It opened the month above 33. But this level, we've reacted down off of that. We bounced off of that kind of key resistance level. And also, check this out. There's this downward sloping trend line here. That's an important part of a bigger chart that we're going to take a look at. And that's kind of coinciding with that level. So now Silver has bounced off of 26 bucks, dropped down pretty far with that sell-off in stocks, but it's recovered nicely. Right now it's trading around 27.87, right around the $28 level. If this gets back up above 32.75, the previous high, that coincides with this downward sloping trend line. Now that downward sloping trend line is part of this chart, which is a massive cup and handle formation in the chart of silver, going back all the way to the 1980 high. Now, this chart spans over 45 years, so this is a very significant chart pattern. For those of you who are not familiar with the cup and handle, it's a very bullish chart formation here from Investopedia.com. You can see what you expect is when it crosses this downward sloping trend line that makes up the handle, it's off to the races. And that is when we get a break above that, it's very significant. I think it's very telling that that line right now coincides with silver's previous high from back in, back in the month of May. If we break above both of those levels, that is going to put a lot of momentum under the silver price. Now, that doesn't necessarily mean that's going to happen, but if we do get the weak inflation print this week, I think the odds of that occurring are going to be up significantly. And to get an idea of how high the rally in silver following that breakout could go, you can see from Investopedia.com, they tell you how to determine a profit target from this chart, from a cup and handle formation. And the way you do this is you take the bottom of the chart of the cup, so this part right here, take the pattern's breakout level right here, you determine the difference, and then you extend that much up from the point of breakout. So to do that, the point of breakout is right around $32.75. Let's call it $33. The bottom of this chart is down under $4. Let's just call it 4 to work with round numbers. So that means that the difference is $29. You add 29 to 33, and that means that you'd be going for higher than $60 silver if we get this breakout. Now, over what time frame will that play out? It could be several months, could be years, but it means if we get a breakout above here that likely that will confirm that silver is in a bull market just like gold. Now, keep in mind, silver's still up in a big way year over year. I think it's up about 16 or 17%. I don't have the chart right here, but it's also up significantly year over year. Now, silver is very volatile. Got to keep that in mind. It's more volatile than gold. And that brings us to this chart, the gold to silver ratio. This also, I think, shows us that we are being set up for a big move, specifically in silver. So right now, you may have noticed that the sentiment in silver is not particularly high. I mean, I read the comments on this channel. I read twitter.com or x.com. I read the commentary on there. I see what's going on the interwebs. By the way, you can follow me on X now, not Twitter, but x.com at StackSmarter. So if you're on X, I would encourage you to hop on there. It's actually a good way to interact with me. If you'd ever like to message me or take part in a conversation, I am fairly active and I keep an eye on that platform. But right now, I can tell you the sentiment is not particularly good. It's part of why premiums right now on silver products are fairly low, because retail investors are not getting into this market. The reason that silver has gone up at all is because of ballooning industrial demand right now. Now, when retail investors start getting into this market, it means that it could move in a big way. It's not like gold where you got central banks buying the stuff up all over the place. You really need some retail investors to drive investment demand. Right now, investment demand for silver is down, but industrial demand is up. So when investment demand gets moving again, I think you're going to see some big moves here. But the reason I want to point this out is because right now, gold to silver ratio at 88.54, that is definitely the historically high end of the range. And I want to tell you that right now, sentiment is bad. I bet in 2008, when the gold to silver ratio was peaking around 81, sentiment was also very low for silver. That's when you want to buy silver, is when the sentiment is low. And you can see that by the gold to silver ratio. And this basically tells you how the sentiment in the metals is when people are looking for a safe haven, which is the case right now, I believe, from inflation, from geopolitical turmoil. They're going to lean more towards gold. And that's when you're going to see this peak. In 2008, great financial crisis, you're seeing the gold to silver ratio have a peak. In the pandemic crisis, that's when the gold to silver ratio hit its all-time high of around 120, a little bit over that. that was because people were looking for safe havens, and they rightly view gold as the better safe haven. But here's the thing. Silver is a safe haven asset as well, especially in the sense that you can hold physical silver in your possession with no counterparty risk. But when a precious metals bull market kicks off, the interest shifts from safe haven to speculative mindset, right? So that's when you see the gold to silver ratio drop, like in 2011, when the gold and silver were in a huge bull market. You saw the gold price around $2,000, silver price around $50. You saw at the lows of the gold to silver ratio here, it dropped all the way down into the mid 30s. So, that's when you want to be perhaps buying gold and not silver, or maybe, consider selling your metals if you're, trading, because that is indicating that you are getting towards the peak of a precious metals bull market. Now, the gold to silver ratio could drop a lot lower than 32.29. It certainly did in 1980. This chart doesn't go that far back, but it dropped down to, I think, in the teens during the 1980 precious metals bull market. So it's very possible that the next precious metals bull market, which we are in the nascent phases of, and you know that because you look at gold, it's breaking out to record high after record high after record high, and yet the gold to silver ratio remains very high. So that shows you that we have a lot more room to run in both precious metals. Gold, despite the fact that it's at around $2,500, it could go much higher because this bull run still has much more room to go. And that's, again, because, the gold to silver ratio is still very high. So you know that this is the early phases of a bull market, because traditionally, as precious metals bull markets move on, this ratio comes down because silver moves up faster than gold in a bull market. It's a more speculative asset. Right now, though, gold does seem to be getting a lot of love as a safe haven asset, and a lot of that has to do with the geopolitical tensions in the Middle East. So this is the other factor that could be driving the metals much higher this week, along with the price of gold, oil, I think silver, even despite the fact that gold is perhaps the preferred safe haven bid. I think silver is going to get dragged along for the ride if this turns into anything in terms of an escalation of the war in the Middle East. So the most recent update on this, Iran has rejected a Western plea to not launch a retaliatory attack against Israel. That was following calls from EU leaders, from the EU to Iran's leadership to de-escalate the situation. They have refused this plea, rejected this plea. They said such demands lack political logic, are entirely contrary to the principles and rules of international law, and represent an excessive request. That's Iran's foreign ministry. So it's looking like this week we could see an escalation in geopolitical tensions as well. Right now, I believe there are peace talks scheduled to go on Thursday. If those fall through, that's peace talks between Israel and Hamas in Gaza. If that doesn't work out, if that doesn't result in a peace agreement, it's highly likely that Iran will launch the next phase of this war. Look, hopefully they won't. Hopefully cooler heads will prevail. I'm not really looking forward to the price of oil tripling and the cost of gasoline and everything else exploding, but it is a real possibility here. And so this week, we have two things going on. We've got CPI data, very critical. You also have geopolitical tensions simmering, the possibility of escalated wars, and you have a gold chart and a silver chart that look like they are on the verge of a major breakout. Gold, if we get a close above this line here, above $2,500, silver, if we get a close above $33 or $32.75, the previous high from earlier in May, and again, to get to that level of silver price, you've got to go all the way back about 12 years to find a time when silver was trading at that level. That could mean that we are on the trajectory to new highs in silver. Interestingly, the $60 or so price target that this cup and handle formation forecasts would be in line with a sharp drop in the gold to silver ratio. Let's say gold doesn't move at all and silver moves up to about 60. That would give you a gold to silver ratio of about 41, which again, that wouldn't even be as low as what happened in 2011. So I think those price targets, very conservative. It's likely silver would be higher than that though, because if silver starts moving up in a big way, gold is going to be running as well. So, I think 60 is sort of the floor for where the next big silver bull market will take us. When is that going to kick off? Is it going to be this week? I don't know that, right? But I do know that silver is very undervalued right now, so I'm continuing to accumulate it. Not trading with leverage. I'm not telling anybody to go out and do anything financially. It's not financial advice, but I do think right now there are some really great opportunities to acquire physical metal. Yes, it's going to cost you more than it did a year ago, but I think a year from now, you're going to be able to say the same thing, perhaps in an even bigger way. So anyway, let me know what you think in the comments down below about this setup for the gold price and the silver price. I know sentiment for silver is low, so I'm expecting some negative comments, but honestly, that just makes me more confident that the bottom has been put in for silver. Anyway, stay safe and happy stacking, everybody. Let me know what you think in the comments down below.